You are listening to Charting Wealth's comprehensive review and forecast for the week beginning Monday, the 12th of March, 2018. For all of our subscribers, there will be a link in your show notes. That's the text of the email you get every day. It'll have an attachment there that you can click on, and it will take you to Chapter 8 of our book, Charting Wealth. We've just put that out. It's on how to use the minor indicators. And of course, on your screen, that includes the Bollinger Bands, that includes the derivative oscillator, and it also includes the moving averages, both the exponential moving average and the simple moving averages, and how we use and utilize those on our charts. If you're not a subscriber, we will put it out again on Monday, but you need to go ahead and subscribe so that you can receive the link to Chapter 8. You will find it very enlightening and helpful, we do believe, and it goes well with the new layout that we've actually supplied to all of our subscribers. That is the freestockcharts.com layout. Also works on TC2000, by the way. TC2000 is available for you to subscribe to. It is put out by the Warden Brothers, and of course, it is the layout that we use every day here at Charting Wealth, and we have a $25 discount for all of you who subscribe. There's also a link in there for that discount. You can also find that same discount offered at the chartingwealth.com website. So just go there and sign up and be a subscriber. It is for free, and you get all the good benefits. Okay, let's jump into these charts. What do we see going on? S&P 500 up big on Friday, 1.72%. Now, when we go to our we're going to get to the 4-hour chart in just a minute. Let's go to the weekly chart first. We see that what had been heading down has now kicked and appears to be heading up. That's the price percent oscillator. Derivative oscillator still very negative, with that huge down movement on the weekly vertical crossover going down back on the 9th of February, and then the sideways slide. All that downward momentum still has the derivative oscillator quite negative. It did back off a little bit. And what do we see going on the weekly chart with the latest candle? Again, a sideways slide. We haven't recovered from where we started down on our Heiken Ashi candlestick, but we do have a green spinning top. Actually, not as big as the green spinning top back on the week ending the 23rd of February. But we do see that we ended the week, and if we move we can see a little better. I'm just going to move the vertical crossover for the 2-day so you can actually see the candlestick. It's got about the same size wick on the top and bottom. So again, it is a spinning top. It means indecision, not as much as the prior week, but tending up. And again, big up day on Friday. We do see that the price percent oscillator is heading up and the derivative oscillator, like we said, is losing some energy. We look at the 2-day chart. That is a 2-day crossover going up, and we have pegged that. We've already made that change on our chart, and we saw the derivative oscillator go from red to green with the latest closing of the 2-day candle. That's a big up move pushed through the weekly trend line at this point, and we can see as far as price movement goes, it's about where things topped out back on the 2-day candle ending on the 27th. So we'll pay close attention as to what happens on Monday over the course of this next week. If there's a big down day Monday, of course, it can drag that price percent oscillator back over going down. That can always happen in the candle that's formed right after a crossing. Doesn't typically occur, but it sure can do so. So that is just, of course, beware now that we've had that critical thing take place. We've got the weekly on a down move, the 2-day on an up move, and of course we had the 4-hour chart crossover going up back in the afternoon on Wednesday the 7th, earlier in this past week. So again, strong up movement over the last 2.5 days. We've seen the derivative oscillator fly up. Now, we still have a confirmed down move on the weekly chart that is significantly weakened after the movement on Friday. But again, Keep your eye on things. If it moves up strongly over the course of this next week, it could drag the weekly up. But at this point, still a confirmed down move and a sideways slide underway in the S&P 500. Different, however, for the NASDAQ 100 or the Qs. Again, we had things move over going down strongly and really has been tending up since then. Unlike the S&P 500, we do have a weekly vertical crossover in effect. It did happen on Friday, so be aware. There may be an opportunity for you to get into an up trade on the Qs on Monday. Look at the charts either at 10:30 on your 30-minute chart, or if you want to just stick with your 4-hour chart, look how things are on that 12 o'clock candle, the one that finishes drawing at noon, the morning candle. If indeed you continue to see green up movement, it of course can mean that you might want to go ahead and do a practice trade either around 10:30 once idiot hour is over, or in the afternoon after that first candle, that first 4-hour candle closes. Up to you, and it's really based on how much time you have to pay attention to the market. But again, look for a potential practice trade on Monday with this weekly vertical crossover going up. Now, as we look at the 2-day chart, what do we see? Well, of course, it crossed over back on the 7th. We had a 2-day vertical crossover, and of course, that almost always precedes the weekly. At some point, the weekly typically follows the 2-day, not always. And then, of course, on our 4-hour chart, it crossed over going up back on the 8th in the morning. So we'll just continue to keep an eye on things. You want to see that continued up movement on the 4-hour chart. If you don't, then you can wait for it to pull back, roll over going down, and then move back over. So those are just things that we always teach, that you use in trying to figure out when, how, and if to get into a trade. Okay, that's where we are with that weekly vertical crossover going up on the NASDAQ 100. What's going on TLT? Well, as we look at the weekly chart, we see that it's still sliding sideways. Ended the week with a red spinning top. That means some indecision tending down. Derivative oscillators losing downward momentum. Price percent oscillator is about the same as it was the week prior, down 0.66% for the day on Friday. We look at the 2-day chart. We see that we have 3 red spinning tops, lots of indecision tending down. However, we are in an up move on the 2-day chart. It crossed over on the 2-day candle ending on the 5th. So again, just keep watching. We'll see. May very well have bottomed out and heads up, but we don't have a trade at this point on TLT, the 20-year bonds. It's sort of waiting for things to shake out, most likely in the S&P 500. Remember, bonds are typically a safe haven when the stock market's not doing well. When the stock market's doing well, bonds don't typically do as well. Okay, what do we see going on the 4-hour chart? It just crossed over going down, even though the week ended up at the end of the day. That last 4-hour candle was an up candle, but a strong down candle in the morning. That's what drove that momentum, both on the PPO, the price percent oscillator, and the DO, the derivative oscillator, which actually went negative. That's where we are on TLT. Lastly, we have for you gold. What's gold doing? It is awfully close to a crossover going down, but we are not going to call it that. It just has not really happened. It may happen over the course of this next week. We may call it this next Friday. We shall just have to wait and see what we see. But we're not going to make that call right now. Derivative oscillator did flip over into the negative. It was an up week as far as the Heikin-Ashi candlesticks go, a green spinning top. So again, up for the week. We look at the 2-day chart. It's still in a confirmed down move. Had some real strong down movement for an 8-day period ending the 1st of March. And then sort of up in the latest candle is a red down candle. And again, 2-day is still in a confirmed down move. And as we go to the 4-hour chart, we can see that it had gone down for about 2.5 days and ended up at the end of the day on Friday, bit of an up move. So again, still in a confirmed up move on that 4-hour chart, and disappointing to us. We wanted to see it really ride, and it has not. It's just sort of slidden sideways and down and really screwed up the 4-hour oscillator again. It works so beautifully, this 4-hour chart, over the past couple of years, and it's just gotten a little screwy since the beginning of this year. Hopefully gold will start trending really well one way or the other, and this 4-hour chart will start working for us, can be a total trading chart again. Folks, that's where we are as we end the week again. Just be aware that we do have a weekly vertical crossover on the Qs, weekly vertical crossover going up. Those of you who subscribe to our text service, it's only available in the United States. Of course, you'll be getting that text. So we'll be sending that out. If you are not a subscriber to the texting service, of course, go ahead and subscribe to Charting Wealth's daily review, which includes this weekly market review, and you will get instructions on how to text to the number 33222, the word Charting Wealth. That'll put you in line to always receive our texts when we have those critical weekly vertical crossovers, either up or down. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.